Hello guys, welcome back to my YouTube channel. So today I want to talk about what has been happening recently in the stock market. The S&P 500 in the last month has gone down about 5%, while the price of gold has gone up roughly 1% or 2%. I believe that yesterday gold was up 5% on the month, whilst the S&P 500 was down 5% on the month. So whilst the stock market is going down, the price of gold is either going up or staying steady. And that's because gold is a much safer investment than stocks at the moment, because there's so much evidence behind the fact that stocks are overvalued. The S&P 500 and the Nasdaq and the Dow Jones, they're all overvalued at the moment in terms of price. And there's plenty of evidence behind that. We can look at the PE ratios. PE ratios are at an all-time high compared to decades ago. That's not sustainable. And the Buffett indicator shows that the stock market is a lot larger than the economy of America, a lot larger than the GDP of the US. So that is not sustainable. The stock market should not be larger than the economy. And I've seen some analysis from some researchers. I can't remember where I saw it, but I believe I saw it on the Financial Times, the Financial Times newspaper. I have the app, but I believe they said that the Nasdaq, and in particular Nvidia, is extremely overvalued, and Nvidia is holding up the rest of the index for the stock market, the S&P 500 and the Nasdaq. Nvidia has had explosive gains in the last few years. I believe it's gone up from below $50 to above, to almost 1,000. So, but I believe recently there was a stock split, so the price has gone down because of the stock split. But that amount of growth is not just in Nvidia. I believe Google has seen the same as well, the company Google. And the reason why the stock market seems to be tumbling at the moment is because this is just the beginning of a stock market crash. I believe that the Fed holding, in August, the Federal Reserve agreed to, at the beginning of August, the Federal Reserve agreed to hold interest rates steady at the current rate. I can't remember what the rate is. It's above 5%, I think. I might be wrong about that, but I know that they have said they're going to keep it steady at the same rate for at least a month. But they did indicate that they may be lowering interest rates slightly in September. However, as we know, holding up interest rates is not good for the stock market or the economy, because it means that it is more expensive to borrow money. And you know what businesses thrive on? They thrive on borrowed money. Businesses need to take out loans to build their business, and a lot of the companies in the S&P 500 and in Nasdaq and the Dow Jones, they have a lot of debt. But when the interest rate is held up, it means that they're having to make more interest payments, which is cutting into their profits, which may make some of them receive a loss. But not only does it impact businesses, it also impacts spending by consumers, because consumers must pay a higher interest rate if they are to borrow money when they buy stuff. So if I was to use my credit card to buy something, I'd have to pay more in interest to buy something with it than I would have to a few years ago when interest rates were zero. When interest rates were zero, credit card rates may be 10%. But while interest rates are around 5%, 4%, 3%, credit card rates can be 20, 30, 40%. And it's the same for loans for businesses. So not only is the interest rate affecting the business side of the economy, it's affecting the consumer side. So if the consumers have less money to spend, then revenue for businesses will go down. Walmart or fast food chains like McDonald's or other fast food chains like Taco Bell, Burger King, KFC, they may receive lower revenues just because people have less access to credit, less access to cheap credit, and that will make them have to lay off staff because they don't have as much revenue coming in to pay their staff. And thus, some businesses may close down and jobs may be lost. That is the definition of a recession, a contraction in production, a contraction in jobs for at least 2 or 3 quarters. If unemployment goes up, that's a sign that the economy is entering a recession. And I believe that the unemployment rate is due to go up soon, and the stock market is due to crash because of that. It's correlated. The unemployment rate is correlated with the price of the stock market. But with gold has been an undervalued asset, and many times in the past, whenever the stock market crashes, all of the investors that have lost their money in the stock market, they pull out of the stock market and they rush to gold, the safe haven asset. So what does that do? That pushes the price of gold up to astronomical levels. And not only gold, but also silver. So that's why I have all this gold and silver. I have 5 ounces here. Soon I'm going to have 6. I have already bought a South African Krugerrand, gold Krugerrand, 1 ounce. I chose the Krugerrand because it was the cheapest ounces I could get my hands on. I ordered it from bullion exchanges. So in a few days you're going to see another video where I showcase the Krugerrand. I don't know what year I'm going to get because I chose a random year. I just wanted to get the cheapest ounce I could, but still a coin, still a bullion coin. But I like Krugerrands because they're the most recognized bullion coin. Even though they're the cheapest, they're still an ounce of gold. And so soon I will have 6 ounces and 69 ounces of silver. I am concentrating more on gold because I believe that gold is safer than silver. Silver is it's volatile. Silver is volatile. It's unpredictable. That's what I meant to say. Silver is unpredictable. You can't predict what silver's going to do, but you can predict what gold's going to do because gold has constantly gone up. But you know that silver goes up when gold goes up. So that's why I have bought another ounce. And I believe that the recession is very close, like within a month or two. In September or even October, there may be a recession starting. And that's when the price of gold will start going up a lot. That's why there's still time to get in to buy gold now. If you have spare cash, you should buy gold. If you're in the stock market right now, you should pull out of the stock market and go into gold because the stock market is going to go down big time in the next couple of months. This is just the beginning. You can save yourself a lot of money if you pull out of the stock market now and go into gold. That's my belief. And that belief is backed by evidence. You can look at the Buffett indicator, and you can look at the PE ratios, and you can look at the number of zombie companies, and you can look at the unrealized bank losses, and you can see that there is a big bubble in the stock market. So anyway, guys, I hope you gained some insight from this video. This video is not financial advice because I'm not a financial advisor. I'm just purely giving my opinion. It's up to you to take your own opinion and do your own research into what you believe it's the right thing to do. You may be pro stock market and you may be anti gold. That's up to you. That's all right. But personally, at the moment, I'm anti stock market and I'm pro gold. So anyway, guys, see you in the next video. Thanks for watching.